Hello everybody, this is Drew Demon, the Devil's Stockbroker, and this is just going to be a quick update on my positions and some DD just really quickly after the close of business today, just to catch everybody up on what I'm looking at. First up, we've got Progenity Inc., ticker symbol PROG. This one you probably already know my thesis on this company if you've been watching me for a while or if you've been tracking any of my Twitter feeds. But pretty straightforward. Progenity is a biotherapeutics and biotech company that are developing a few different types of treatments and systems for changing the field of internal medicine. They currently have an earnings call, which is coming up on March the 28th, so next Monday, and that's it's going to be a huge earnings call for them. My main reason for calling this out is because Progenity has several catalysts in the works. This company is extremely oversold, and it's been proven to be extremely volatile in the past, especially after retail got involved with it back in September when it was trading around 80 cents at the time. The company is altogether very good, structurally solid, and they have cash available on hand that they got because of a series of dilutions while their price was going up towards $6. They had fantastic data and patents available that were approved during that time, and it caused a lot of retail interest as well as institutional interest in the company. Back before Hell's Trading Floor was the thing, I called out how valuable this company was and what I thought that it could become. So inevitably, once the news got out what a good company it was, they squeezed, and the company was able to give itself some cash on hand by diluting some of its stock, which unfortunately did hurt the price of it. But at the cost, it was a necessary cost in order to give the company much needed breathing room to guarantee its continued success and operation throughout the next year of 2023. So I will, while I don't feel great about the dilution, I accept it as a necessary evil, and it has proven to keep the company going strong into a very necessary through a very necessary manufacturing process, which they are now building out for their new products. So I'll discuss those very briefly. The first thing that is up is currently there is a new patent which has been released and approved on the USPTO. That's the Patent Trademark Office. It is the product Precludia. This is a preeclampsia rule-out test, which preeclampsia is it's basically a blood condition or a blood pressure condition that arises in pregnant mothers and is the second leading cause of maternal death in the United States and developed countries. Preeclampsia is extremely dangerous and extremely lethal, and it tends to present itself often when nobody is prepared for it, and it puts both the mother and the child at risk during labor. Preeclampsia, a preeclampsia rule-out test would give doctors much needed warning months in advance to note if the mother would be at risk for preeclampsia. So Progenity has created and is now actively testing through its clinical trials a rule-out test called Precludia. This product, once available, would be the forerunner into a $3 billion market, which would immediately, if Progenity was even able to capture 10% of that market share, it would immediately more than 5x their revenues based off of their current numbers. Basically, Progenity is about ready to start producing a product, and this product has a $3 billion market estimated just based off of the need for it in medicine. What's more, this product would be saving lives. It would further decrease the mother mortality, mother and infant mortality rate during labor. And generally, it's just a good thing for the world if this risk is mitigated. But the other thing that Progenity is creating, which is even more exciting, is an oral biotherapeutics device in the form of basically what's a smart pill. There are two types of devices. There is the drug delivery system, DDS, and the OBDS, which is oral biotherapeutics delivery system. The difference is that the DDS is simply a smart pill that opens up in the gastric system once it's past the stomach, and it safely deploys the medicine directly into the intestines where it is absorbed and digested at smaller doses without risk of being destroyed by the stomach acid. The OBDS system, which is a little bit more complex, the pill actually deploys a delivery system which then injects medicine directly into the wall of the intestine, and this is applied to drugs such as one candidate, adalimumab, which is that's the clinical name for Humira, the world's most profitable drug, which has I believe it is a quarterly revenue of approximately $30 billion. There's just an insane amount of money that comes in through just this one drug, and because it's the owner or the creator of the drug, AbbVie, um, their current patent on Humira is about to expire, and if Progenity is able to develop this new delivery system in time, then they would be able to license and repatent with a partnership with AbbVie and give AbbVie a new lease on its drug, allowing them to continue pulling in all that money. What goes a little bit further is that Pfizer, which develops the drug called tofacitinib used in the treatment of ulcerative colitis, is also an excellent candidate for the drug delivery system, which the current deployment system for this drug is just a simple pill tablet dissolves in the stomach, and it most of it gets destroyed by the stomach acid. The Progenity DDS would be able to deploy a much smaller dose, resulting in fewer side effects and simultaneously increasing the effectiveness of the actual drug through a partnership with Pfizer. Both the DDS and OBDS are currently going through preclinical stage trials, and the PGN 600 patent for the OBDS is in process and being tested. That's enough of the fundamental catalyst. Let's actually talk about the actual technicals of the stock. First off, I want to remind everybody what their current float size is. Basically, this company is trading more than 147.5 million shares on the float. There's approximately, I believe it is a little over 250 million outstanding shares. Progenity currently has 163.75 million outstanding shares with a free float of approximately 122.8 million. This is according to 12 data. The current days to cover sit at 1.27, and Progenity has a rather large amount of short interest. Just a quick review of the Ortex data. If you look at the current utilization on the stock, the utilization has been averaging around 95 to 100% on utilization. So more than 90% of the stock that is available to be borrowed is already borrowed and being used to short the stock or being used actively in trades by market makers as a hedge. The number of shares on loan currently sitting at about 22.97 million, or roughly 13% of the float. Or I'm sorry, 17% of the float. The current short interest itself sits at about 17.58 million, which is roughly 13% of the free. The cost to borrow is a little elevated. It's not super killer right now for shorts. They're paying about 9%. That's an annualized payment every single day for the shorts. So again, not a huge number, but it is significant enough that it does, as it rises further and further while the price is going against them, would incite shorts to cover. And 17.5 million shares against the stock is no small number, considering that most of the float is held by institutional ownership, with about 10% of the stock being held by insiders. There's a significant portion of the stock that's being held by an institution possibly looking for an acquisition or buyout, or even to sell to a much bigger firm. And it's been speculated that Pfizer could be a candidate for such an acquisition, but that's not known at this time. The important thing to remember is that most of these shorts are they're either retail shorts or hedge funds that are possibly playing both sides. We're not sure, but there's quite a bit of them. And if this price continued to go up against them, which right now I believe Progenity has hit the bottom and is now on the rise to begin its next leg up, and we're going to go over some of the technicals to look over that. Reviewing the technicals, we see a few things. Progenity had a huge leg up and then a slow descension after it bottomed out at around $2.25. After it saw its next leg up, it's been in a downtrend ever since, which it has now thankfully broken. There's a couple of things that we can draw from this chart just based off of these recent price action. First is a Fibonacci extension, which I've drawn the top of here at the at the very top of a at the very top of its squeeze. This was a short squeeze originally. And so based off of that, we are speculating on some resistances at the 240 to 250 level and a few others based on Fibonacci retracement. The trend itself, which you can see here, would appear to be that of a down channel, which it's now broken above as of the 21st of March. If you look at the chart here, you can see that we have had a double bottom, or possibly you could actually say that this is a triple bottom, which is a bullish signal. The price of Progenity has touched $1.10 3 separate times. If you count this one little candle that got pretty close but not quite, it would be 4 touches of that $1 level. And since that is such a strong level of support for Progenity, it has since rebounded, and this was actually the buy signal back down here after we had gotten confirmation of support at $1.15. So if you had entered in that position, then you would currently be up about 46%. What we're looking for, however, is for things to grow at a much faster rate than that. Currently, Progenity is grossly undervalued, in my opinion. This company is building something that no other company has. Between the preeclampsia rule-out test, Precludia, the drug delivery system, and the oral biotherapeutics delivery system, Progenity is attempting to enter what would be over a combined $80 billion market, which it would be the forerunner to once it achieves successful deployment and manufacturing of these products. Precludia is already prepared to go out. The only thing that they need is clinical trial data to prove the efficacy of their rule-out test, verify the findings, and prove that it can go to market, along with an FDA approval that would be sure to follow. Currently, they have that data. Their preclinical trials have been completed. They have not yet disclosed that data. That is expected to come very soon. However, the patents for it have been announced, those have been approved, and the patent office has issued those patents back to Progenity, which it has agreed are valid. So given that, then everything that Progenity needs to have in place to begin its manufacturing process of the Precludia tests is there. All the pieces are in place. Now we wait for the actual news to drop, which what better time than during a investor earnings call. Let's quickly go over the short exempt data from FINRA just to go ahead and see if we've seen any volatility from market makers. As you can see, Progenity has been in an uptrend for quite a while. The last 8 days have been overall bullish for Progenity. It hasn't had a red day except for one, and it was only a retracement of 2 cents from one close to the next. The amount of short volume has been increasing, and the lending volume has been increasing as of late. Just compare with its last several months of trading, and the short exempt volume has been getting higher and higher. Now, this just means that market makers are short exempting more trades in order to fulfill buying. This is not a massive number of short exempts. However, it is a rather large ratio of short exempts to short volume. So compared to its float, this isn't a situation like MULN. I don't want people to get confused. But Progenity is seeing an escalation in its number of short exempts and the short exempt ratio. It's not quite at the level that I look at to indicate a surefire squeeze of any kind, but it is elevated, and that is a sign that volatility is returning to the stock. Further, if we look at the 5-day simple moving average delta rate, we see that it's increasing at a rate of more than 5% over the last 3 trading days. Now, this is an extremely bullish signal that I use in order to tell me that there is a lot of FOMO and a lot of volatility and speculation and bullish euphoria coming into the stock because it has been rising and it's been moving fast and far enough to lift its 5-day simple moving average at a rate of 5% per day for 3, almost 4 days in a row. That's significant. That's something worth paying attention to. After refreshing the FINRA data from today, we see that there was a lot more short exempts today as well, and we closed 3 cents a little higher from the previous day. That is continuously lifting the 5-day simple moving average up above 5% today as well. So we're still seeing that same amount of lift. It's an excellent, excellent bullish signal. If we look at the call options, call versus puts breakdown, or basically the put-call ratio, we see that 84.8% of calls for Progenity are bullish. Or I should say, of the options traded, 84.8% of them are calls. This is both buying and selling. If we look at the heat map for the calls, we see that the OI is extremely focused on April 14th and mainly centered around the $2 strike, with the next highest being the $3 strike. The strike that is most likely to end up in the money, if there were any, is the 1.5. If Progenity continues this momentum, it's already currently slightly in the money. So that's a rather good option to bet on if you want to try to play things safely. Just be aware that those will be a little bit more expensive if you want to choose to do that. If we look at the puts, there's a lot of out the money puts that are they actually were in the money up until recently. The closest ones to out the money were the $1 puts. Progenity never quite got down to $1, so these were the closest to safe and speculative puts out the money, expecting that Progenity would be trading below $1 by next Friday, not this Friday. But most of these are going to expire out the money, in my opinion. Now, if the puts that are for $1.05 or $1.50, I should say, expire out the money, which they are currently out the money right now, these are going to start rapidly losing value as theta eats away at them as we get closer and closer to the April 14th data, or if the price of Progenity continuously climbs away from this $1.50 strike and moves higher towards the $2 and $2.50. Now, what's interesting is the number of puts against Progenity for July. These are the ones that I believe are most likely shorts and hedges by market makers and institutions that believe that Progenity may be trading below this price. So if there are these bearish institutions that believe that Progenity is going to fail for any reason, those are most likely the strikes and options that they would be playing. As these go further and further out the money, it will cause bullish pressure on the stock, and these puts will lose their equity rapidly. Put this together, and what you see is the amount of you see a big gamma ramp that leads from the $2 to $3.50 strike, more than 6% of the total float in Progenity if it ran in the money. If it ran in the money to $3.50, then more than 6% of Progenity's float would be in the money. I have an extremely bullish outlook for Progenity for its coming earnings call. I am extremely I'm extremely heavily leveraged in this one, so please be aware that I am biased, and I have my own reasons and my own incentives for talking about this stock. So just be aware of my biases, and don't trade on this stock just based on this information alone. You should learn to do your own due diligence and pay attention to the other factors of this stock. Think about its financial situation and other things of that nature. Okay, I'm not in the business of trying to trick people, and I'm not in the business of pump and dumps. I'm here just to relay the information as I see it. If you are interested in trading any types of security, then you should do the same for yourself and make sure that you are taking in all the information of the opposing side of the trade. Quick look at the on the 15-minute chart. We can see that Progenity is creating a very nice bullish pennant right here. The current pennant is closing a wedge going into Friday close. So if Progenity goes above $1.75 at any point in the next trading session, then that would be a bullish buy signal of a breakout. And currently, given that it is trading in a range between $1.69 and $1.80, that would be huge. The resistance at $1.80 is pretty strong. So in order for Progenity to get back to that $2 level, we need to see a clean break above $1.80. Thankfully, we have seen these volume spikes carrying it over, especially during the morning trading sessions. So whatever we expect to see Progenity do is likely going to be signaled first thing in the morning and during pre-market trading. So keep a close eye on that, and if you want to consider a trade in Progenity, know that it will be very volatile in the morning. It tends to be that way for this particular ticker. BBIG, for that is the ticker symbol for Vinco Ventures. There is a bit of a volatile bullish pennant going on here, or a bull wedge. The stock is currently trading at and around this Fibonacci resistance level at about $3.10. It's this is based off of a fib level from its previous price action, where BBIG went from an average price of about $2.20 all the way up to a high of $5.45. If BBIG wants to seek a breakout, then we need to see it crack above this $3.15, $3.20 level. And if we do get a breakout above this bullish wedge and this Fibonacci resistance, then I would expect a break all the way up to $4. Currently, I don't have a position in BBIG. I'm waiting for a little bit more confirmation for it to break out above this fib level. I was day trading this, just for full disclosure, and I'm mostly trading in options for this. However, there are plenty of reasons to invest in this company for the long term. I have had it said to me many times that it's a very good company, and I understand that it's a great acquisitions company and has the potential to get very big. They're really big into the social media space. They've got their Cryptide offering and Dividend, which is coming. And I have completely forgotten what the ex-dividend date is for BBIG's Cryptide offering. But just know that there is an offering in the form of Cryptide share dividend, where holders of BBIG will receive a dividend in the form of Tide shares for their new spinoff company. If they are holding shares through the record and ex-dividend date, they will get those shares. That being said, I'm mainly just trading this one as a swing trade, and I'm just trading options back and forth. But I do see some excellent upside for BBIG, and it is a shorted company, very heavily shorted company. So it's worth paying attention to. Next stock that I am also looking at is IRNT. IRNT is IRNT. This is a cybersecurity company, and I've talked about it quite a bit. I'm just going to focus on the technicals of this one. It's been in a downtrend channel for a long time, ever since it had an inexplicable squeeze, and it sold off following a brief pop in October 2021. It's sold off ever since. It was down in this channel, which I'm calling the zone of demand, and it briefly broke out of it on the 25th of February and went back into it very briefly during mid-March, and then it's now starting to show signs of volatility again. I'm expecting, if there is another breakout, for it to start challenging these three areas of resistance between $5.10, $7, and $9.45, all the way up to the $12 Fibonacci resistance. I am trading mostly calls in this one for May 20th. ALZN is another one that has been called out by ScourgeBot, which is a specialty. This is specialty software created by Hell's Trading Floor. ALZN is basically a penny stock. This one is also traded by one of the large investors of MULN by the name of Todd Milton from Alt Global Holdings. This company is, I am not going to really talk very much about what I feel about them, but I will mention that they tend, whatever they seem to be talking about does very well in inexplicable ways. For whatever reason, any stock that they start to talk about pretty frequently on social media, or even start thinking about talking about on social media, it starts to do very well for some reason. So we were early at Hell's Trading Floor. We got into this stock a little after the 26th of February, when these two signals were triggered by ScourgeBot. These are Todd Vergences. And then also on the 14th and 16th of March, two more of them occurred. So we added to our position then. Most of these are for calls for May 20th. If ALZN gets above $2.50, then, well, at any point between now and May 20th, that would be excellent. And then all of a sudden, lo and behold, as soon as Alt Global Holdings began talking about this stock, all of a sudden there's a huge volatility spike, and it's starting to move to the upside. So, I don't know what to say. ScourgeBot is really good at predicting whenever some shenanigans are being played with a particular stock. I don't know what the relationship between Alt Global Holdings and this particular stock are, except for the fact that they own more than 60% of it. But whatever. If they want to talk about it, great. I'm in early on this stock and I'm feeling pretty good. They had a decent earnings with, basically share neutral. They met their earnings expectations, and it's another biotech company. That's about all we know about it, and we're just looking for this one as a technical swing trade. This is XELA, another one that's very heavily shorted and got a lot of retail attention. We've seen some volume pops in this one pretty recently. They had a decent earnings report. Not too bad. 50% surprise on their earnings EPS, and there seems to be this pretty thick resistance here at $1. So right now it's half that price. Even if it only went to that resistance again, that's a 100% profit right now from where it's currently sitting at. So worth the risk. Just be aware that this company is below the listing requirements for NASDAQ, and they have been issued a warning by NASDAQ, so they are at risk of delisting, and that is the major risk for this company. The stock is MAPS, or WN Technology. I currently closed my trade on my calls for this particular ticker. Looks like I'm regretting that decision a little bit, but it was just a day trade. Seems to be doing pretty well. If you're still in those calls, congratulations. It looks like you're up in post market. BKKT starting to get a little bit more volatile. It moved pretty far a few days ago, and it looks as though it's beginning to show a pennant. I'm probably going to look to re-enter my position in this stock pretty soon. I sold when it popped like this back on the 22nd of March. And since it moved up a little bit more today and it's continuing to show strength, I'm probably going to look to re-enter this position tomorrow. NIO was called out by Cap Moores on Hell's trading floor. This one seems to be getting a lot of bullish flow. The earnings doesn't look like it went too well, but we're going to see how it does. It does look like it's currently up in post-market trading right now, so at least the company seems to be performing to expectation, but we're just basing this trade off of the bullish flow, and currently it does look as though it may be beginning to form an inverse head and shoulders pattern, which you can see the shoulder here and the head down here. So if it currently, if it sees resistance at 23, break down and break back out above $23, then I would expect this one to run. And then we'll save the best for last. AMC and GME. Currently AMC is rocking and rolling at $20 in post-market trading. It's beginning to challenge its previous resistances, and we can see that the OBV on this one is starting to curl upward. This is a big signal that I was looking for to look for confirmation that AMC is looking to make another squeeze. And currently AMC is sitting at over 22% short interest with 100% utilization. So there's definitely reasons to be paying attention to AMC right now. GameStop making huge moves recently because of Ryan Cohen's tweet and a bunch of insider buying. There's a lot of reasons to be excited about GameStop because it too is extremely heavily shorted, and it's been speculated that both GME and AMC have been heavily naked shorted into oblivion, and those naked shorts are still outstanding to this very day. If that were proven to be true, then I imagine that wherever these companies were that were naked shorting, it was probably back when it was trading down sub $5, and they are not very happy right now with its current price. And if it continues to rise against them and they were forced to close those positions, it would not be good for them. And you know how I feel about making hedge funds and market makers feel some real pain. The very, very last one, MULN. MULN is currently basing around $3. It's still showing strength here. This consolidation is a good sign for this stock. I am still holding on to my onto a very small MULN position that I have. I did triple it. It was small to begin with, but now that we have risen above this wedge, I'm going to probably add to my position again tomorrow. It's down in post market trading, but we'll see how it does at the open on Friday. And I may be looking to leverage another position because Monday is the day that MULN likes to make its big move. So if it trades a little bit down on Friday, then I will take advantage, buy the dip, and look for a sign of confirmation before I make my purchase. As always, none of this is financial advice, and be sure to do your own due diligence before making any stock purchases, and please respect your risk and never risk more money than you're willing to lose when trading in the stock market. Thanks very much, and have a hell of a time in the markets.